Good morning to our viewers in the United States, and good afternoon to our viewers in Europe. Thank you for joining us for today's discussion about trends in digital currency. The coronavirus crisis is accelerating the development of central bank digital currencies, or CBDCs as they are often called, because the pandemic has prompted millions of people to turn to cashless payments. But the movement to create CBDCs is nothing new. Central banks have been exploring whether they could be a reality after Facebook's efforts to launch its own cryptocurrency called Libra, which raised the prospect of a private company competing with traditional currencies. I'm delighted to welcome Burkhard Balz for a conversation about how the Deutsche Bundesbank is preparing for the prospect of digital currencies. Burkhard Balz has been a member of the executive board of the Bundesbank since September of 2018. Prior to this, he was a member of the European Parliament and served as the center-right's European People's Party coordinator on the Committee on Economic and Monetary Affairs. Before he was elected to the European Parliament, Burkhard Balz held various positions with Commerzbank. Herzlich willkommen. It's wonderful to see you again.
Well, thank you, dear Steve. Ladies and gentlemen, I'm delighted to have the opportunity to talk to you about one of the most exciting topics facing central banks today, the future of money. Do we need other forms of money besides the ones we already have? And do we need other forms of central bank money? Should banks' deposits with the central bank be tokenized? Should banknotes become digital? There are many questions surrounding central bank digital currencies, and we still have to find the right answers. But one thing is certain. Central banks around the world have undertaken tremendous efforts to assess the potential and investigate the opportunities of CBDC. And just recently, the Bank of International Settlement, the BIS, published its third survey among central banks worldwide. The survey shows a shift from mainly analytical work towards technical experimentation. And more than 60% of central banks are engaged in practical experimental work. It is clear then that even more headway has been made in exploring central bank digital currencies over the past year. On the one hand, the BIS predicts that central banks representing a fifth of the world's population will issue a general purpose CBDC in the next 3 years. And on the other, a widespread rollout of CBDC seems some way off. And there are good reasons for this, because CBDC is a game changer with potential benefits, but also with a number of challenges. Central bank digital currencies promise to combine the improved efficiency of their digital form with the safety provided by a central bank in a single means of payment. However, central bank digital currency would be a third form of central bank money, alongside cash and bank reserves. Introducing a new form of central bank money such as this could have profound impact on the financial system, especially if it's not only available to banks, but instead like cash today. If not properly thought through, such an intervention may lead to unintended consequences. Today, I would like to outline to you the areas that I believe we need to tackle in order to create a safe, efficient, and future-proof currency. But Let me start with 3 trends we are currently observing: digitalization, declining cash usage, and the emergence of new forms of money. Our economy is growing more digital by the day. Business processes are becoming increasingly automated and interdependent. Complex value chains arise. The Internet of Things enables machine-to-machine communication. E-commerce and online services of all kinds are about to experience an enormous uptake due to the pandemic. And the pace of digitalization has probably never been faster than today. These developments are increasingly calling for a safe and efficient settlement asset which can be seamlessly integrated into almost any kind of business process. And parallel to this, we can see that the use of cash is waning, even here in our country, in Germany. The current pandemic has boosted not only the use of credit and debit cards, but contactless payments in particular. In a recently conducted survey on payment behavior in Germany during the coronavirus pandemic, we found out that the share of cash transactions has fallen from 74% to 60% over the last 3 years. Admittedly, it remains to be seen whether the current behavior also persists in the post-coronavirus period. But what we are currently seeing is quite a considerable change for a country which is strongly accustomed to paying in cash. Another trend is the emergence of new forms of digital means of payments. These can be central bank digital currencies issued by foreign central banks, as well as privately issued means of payment, such as stablecoins. At the moment, these alternative means of payment are still in the development or testing phase. However, given the speed at which technology is developing, their widespread adoption might be far less off than we think. Should these forms of money become widely used as a medium of exchange or store of value in the euro area, significant implications could arise for the role of the euro or the payment industry, and consequently also for the financial stability. The 3 trends I have just outlined highlight that if the payments ecosystem is going to expand, central banks need to be prepared. As highlighted in the report by the BIS and 7 central banks, the central banks need to be in a position to make an informed judgment when it comes to the decision on a central bank digital currency. Any dedicated central bank digital currency should be designed carefully. Possible advantages, such as safety and efficiency improvements in everyday payments, productivity gains by promoting money which could be used in programmable environments, or the availability of new services must clearly outweigh the potential risks with regard to monetary policy or financial stability. In any case, it must be properly designed so as to mitigate all of those risks. The euro system is taking a comprehensive approach to addressing these challenges. As part of a high-level Eurosystem task force, my colleagues and I identified possible scenarios that would require the issuance of a digital euro and published them last October in the ECB's report on a digital euro. The Governing Council of the ECB has not yet reached a decision on whether to introduce a digital euro. We must first be sure that there is a need to issue CBDC, and if so, that we are able to manage the accompanying risk. In the digital age, time is of essence, but we also have to take the time to do our homework. Therefore, the Eurosystem has started to engage widely with citizens, academia, the financial sector, and public authorities to assess in detail their needs, as well as the benefits and challenges they expect from the issuance of a digital euro. In mid-January, a public consultation on the digital euro came to an end with record levels of participation from European citizens. Experimental work supports the analysis of possible technical designs and their implications. Further outreach to the market and exchange with other international central banks leading the work on central bank digital currencies will follow. And this brings me to my last point. International cooperation will be key in shaping the future ecosystem for central bank digital currencies. As the BIS and other central banks have rightly emphasized in their report, regardless of the final design, there are certain core features and common standards that are available in guiding a central bank when deciding to issue a digital currency for the public. The features I consider most relevant in this context are convertibility, interoperability, and international standards. Convertibility is essential to ensure trust in a currency. People must be sure that they can exchange the form of the money they hold at par at any point in time. Interoperability is required to ensure a smooth exchange of money between different kinds of payment systems. In a digitalized world, this is an absolute prerequisite to ensure an efficient financial system. And finally, appropriate international standards are the focal point in ensuring an efficient cross-border payments flow. In my view, these three features are key determinants of a stable and broadly accepted digital currency that fits into the international financial system. Against this backdrop, safe and efficient payment markets must be brought to the next level, in particular for cross-border and cross-currency payments. This topic has been on the, on the agenda, for several years. And while we have seen significant progress in improving payments at the domestic or the regional level, cross-border payments are, putting bluntly, still in the medieval age. The G20 roadmap on enhancing cross-border payments is an important step in this direction. The Committee on Payments and Market Infrastructures, together with the Financial Stability Board and the BIS, has set up a comprehensive working program encompassing 19 building blocks across 5 focus areas, including new payment infrastructures and arrangements which cover central bank digital currencies, amongst other things. This work can only serve the long-term goal of achieving a fair and sustainable payments landscape, as long as international cooperation thrives. And I'm personally optimistic that this fruitful work initiated by the G20, but also in the form of other international formats, will continue. CBDC might not be a panacea for all challenges that payments are facing. But it might be an option, including for cross-border payments. In a nutshell, payments are and always will be a backbone of the economy. The digital economy has already changed the payment landscape quite significantly and will continue to do so in the future. It is the responsibility of the central bank to create trust in its currency and to ensure that payments remain competitive, innovative, and safe. And we also have to ensure that central bank money will be offered in a way that is compatible with the digital economy. Let me finish with the words of Abraham Lincoln, and I will quote him here. The best way to predict the future is to create it. Thank you very much.
Burkhard Balz, thank you very much for setting the stage with these opening remarks. I'll kick off our conversation. We've started to get a number of questions through the Q&A function, but I'd like to remind our viewers that if you have a question, please send it through the Q&A function, and I will do my best to fold your questions into today's conversation. Burkhard Balz, from what you said, it sounds as if digital currencies offer a real opportunity, but that there are also a number of unresolved challenges and even some unanticipated consequences that you and other central bankers are looking at very carefully. One of the themes that's come up in the Q&A function, and one of the things that I wanted to ask you about, is if you could share with us the similarities or differences between a digital euro and Bitcoin. I think many people are familiar with Bitcoin, but not quite as familiar with a central bank digital currency.
Well, very good question, Steve. To be very frank, I do not see any similarities between a potential digital euro and Bitcoin. Why is it so? Bitcoin is a crypto asset which circulates in a decentralized network and does not represent a liability to any private or public entity. And with its high, really high at the moment, fluctuations in value, it may be a good speculative investment, but it's not that ideal as a means of payment. That's my view on that. And in addition, I would also respond to your question. From my point of view, the Bitcoin transfer mechanism is, I would say, rather inefficient and environmentally problematic due to the specific consensus protocol. And a digital euro, by contrast, would be a liability held by a central bank, in our case, of course, the euro system, and it would be a supplement to cash or euro deposits in a commercial bank. The owners would be able to convert it to these forms of the euro at any time, really any time. So they would have here a widely accepted means of payment in a form of a digital risk-free central bank money. Perhaps it will even become, when the decisions are taken, become a legal tender.
And do you, I mean, maybe this is a foregone conclusion from what you just said, but one of our viewers is curious whether you think CBDCs would obviate Bitcoin over time.
Well, that's also a good question. Of course, there is lots of space also for, as I said, private crypto assets. What the time will bring, we will see. But of course, as a representative of a central bank, I can tell you at the end of the day, the means of payment coming from public authorities, and central banks are public authorities, will be superior when you compare it to private means of payment.
Thank you. So I'd like to maybe hone in a little bit on the relationship between consumers and digital currency. You talked a little bit about how more and more people are moving to use credit cards, debit cards, contactless payment. How do you see consumers using digital currency, and what do you believe the benefits would be? And I guess related to that, from a central bank perspective, how would consumers even access central bank digital currencies? Because that's something that really is in the wheelhouse of the central banks rather than commercial banks.
Well, you see, a central bank digital currency would give consumers definitely more options. It could be a digital modern means of payment from peer-to-peer, from point to sale, or even then for e-commerce payments. So this option, Steve, could become quite important if cash will lose more relevance in the future. And we have here in Europe already seen in some of the member states of the European Union decreasing cash usage, for example, Sweden or Netherlands. This was a quite sharp decrease we have seen over the last couple of years in that respect. So a central bank digital currency could foster financial inclusion, also taking into account the needs and the preferences of people who do not yet have access to financial services. I mentioned that already. Easy accessibility for all groups of the population and cash-like privacy features could be particular benefits also. And however, there is definitely a long road ahead of us before we can make an overall assessment of the concrete advantages and also disadvantages of a dedicated solution. Technologies evolve fast, and we need to make sure that we really understand them and provide a level playing field then for the next generations of payments.
Along this line, we have a question from one of our viewers here in New York who writes, from a consumer perspective, what are the advantages of introducing a digital currency versus existing modern global payment systems like those offered by fintech banks like N26 or Revolut, where you can easily operate in multiple currencies at the same time with minimal transaction costs?
Good question. First answer to that question is definitely, of course, the safety behind a Cbdc. At the end of the day, a Cbdc is issued by a central bank. And of course, you can trust mostly here to such a issuer like a central bank. That would be the first answer on that. Then, of course, as I have said, with the safety combined, you can get then different kinds of advantages. As I said also, that there will be a creation of P2P or peer-to-peer point of sale and e-commerce payments. That is not really new. Of course, the colleague who asked the question has there a point. But at the end of the day, I would say that we will really give their big advantages also on the financial inclusion topic. When you look at other parts of the world, not so much to the US or Europe, but when you look to Latin America, Africa, some parts of Asia. Then, of course, this kind of financial inclusion access is really key for the people. I have been, before the pandemic, to South Africa. And South Africa is a country where many other workers from the sub-Saharan countries are going to and work there. And they have then problems really to get their money, which they've earned, back to their home countries to support their families, their friends, their relatives. So for me, the second biggest advantage is definitely also that a well-trusted CBDC can really help here to get many people globally much more to financially included people. And lastly, we are in a pandemic, in a crisis now. And at the end of the day, again, you have here then a very trusted means of payment. When we see or have seen the start of the pandemic here in Europe, that was end of February, early March, we have seen that many people really have fled into cash. They went to their ATMs, they went to their banks, got cash out of the banks, and took the cash back home. And when you have a CBDC in your wallet, of course, you have the trust that this is a stable currency, even in times of crisis.
So we're getting a couple of questions about sort of the impact of central bank digital currency on the banking system writ large, but also just about usage. One of our viewers writes, since most traditional money like US dollars and euros is already in a digital form, what is the advantage of a CBDC? The advantage of Bitcoin and other digital currencies are anonymity and the ledger. Why should someone prefer a CBDC over Bitcoin or the current digital version of traditional currencies?
Well, as I said, I see a CBDC as an additional means of payment beside cash, and of course, then the commercial banks accounts cash. So when I really think about that, I see really the advantage for CBDC that you have an additional option for that, which is guaranteed by your respective central bank. At the end of the day, Bitcoin, of course, when we look at that, because you have mentioned Bitcoin, is of course also from a technical point of view, definitely an interesting and very safe means of payment. But here you have on top not only a technical safe currency, but also with a guarantee by the state, or here in the Eurozone, guaranteed by the European Central Bank. So from my point of view, it's quite clear that you have a much higher safety when you use a CBDC.
And I guess maybe as a follow-up to this, just because a couple of people have been asking about it, what would the digital currency through the central bank mean for commercial banks, particularly in Germany?
Well, also a very good question, because I normally discuss that every week with commercial bankers here in the country. But to answer your questions, of course, there are opportunities as well as risks related to issuance of a digital euro, And this is the case not only for the German banks, because you have asked what does it mean in Germany, but definitely for all banks in the euro area. Well, looking at the opportunities first, with the digital euro, the payment systems in Europe would definitely evolve further. This opens up new chances for all market players involved. Banks would have then the chance to create services on top of their pure payment service. New business models might develop for which a digital euro could be then the backbone. However, as I already said, a digital euro also could come with, I would name it, some challenges. In times of crisis, especially, we might see strong shifts from deposits from commercial banks to central banks accounts. And then the digital nature would probably accelerate also this phenomenon. And we might also see an impact on the payments markets, on current business models of the banks. And therefore, we need really, and I want to repeat this, we need really to be very careful when designing a digital euro. One last thought, the potential digital euro must not replace bank deposits on a large scale. It would be designed for transaction purposes, not mainly and firstly as a store of value.
Thank you. There are a couple of questions before we get onto the international dimension, and I guess one of the questions that I had for you is about the security of digital currencies. How secure are they, or does that factor into some of the unknowns that you were talking about? But also, a couple of our viewers have asked about privacy concerns when it comes to the use of digital currency.
Well, I could answer here very brief. When talking about central bank digital currency, I'm sure that any of the solutions devised will be very secure. That's absolutely clear. Otherwise, we won't issue a Cbdc. And then safety and security are at the heart of a central bank operated system. Facilitating safe and efficient payment systems is one of the core tasks of a central bank. And on the privacy issue, I can tell you that we are at the moment discussing that very intensively within these already mentioned high-level task force, because in the public consultation we have seen in the core of the answers that the privacy issue is key for most of the people and institutions in Europe. So we will definitely take this issue of privacy into the heart of our considerations we do have when it comes to creating such a Cbdc.
Thank you. Turning to the international dimension, you outlined in your remarks three overarching trends in Europe that I think are in many cases applicable to other parts of the world. But the core question is, how do you see these trends playing out elsewhere? And what are other central banks doing when it comes to exploring the possible creation of digital currencies? And specifically, can you talk a little bit about what's going on here in the US, what's going on in China, what's going on in the UK, particularly in light of Brexit?
Well, a very important question, because as I said already, most of the central banks are at the moment dealing with this Cbdc issues. So of course we are interconnecting with other central banks, talking to them what they are doing. And of course, it's also questionable whether one CBDC can really compare to another. I would take one example, and I will come back later to the US from my point of view. I would start with China. China is currently a kind of first mover, I would name it, with regard to the development of large-scale CBDC. In the news, we read that the practical tests are progressing well. They have 4 test regions altogether in the country. And so it will definitely take time for us to catch up here with a country like China. But in my view, however, thoroughness is much more important than speed. By the way, the Fed Chair Jerome Powell said the same, and I can assure you that we have in this respect definitely the same view like our colleagues in the US in the Fed. So for the Euro system, we need a well thought out approach, including with regard to the risks and the implications, and that's what we are doing at the moment. But also we should be aware that the culture and also the user preferences may vary from country to country or region to region globally. For example, and we have just spoken about that, the issue of privacy might be interpreted differently in different parts of the world, and I think you know what I mean with this.
That is actually a great segue to another question. Obviously, so much of what we do at the American Council on Germany is focused on trying to build bridges between Europe and the United States and promote collaboration. And one of our viewers has written, what sort of transatlantic cooperation do you think would be the most useful in the near term in this regard? And I guess one of the things to think about is, are there certain standards and norms that can be introduced, but also particularly in the area of privacy, are there things that Europe and the US can be considering together as we look forward to a future that we can't quite determine right now?
Great question, because from my point of view, it's key and also mandatory, I would say, that the central banks authorities on both sides of the pond will here collaborate. It's absolutely necessary because from my point of view, we still and hopefully also in the future share the same values. And for me, it's absolutely important that we really speak to the colleagues on the other side of the Atlantic on that. We have there many highly respected colleagues, persons. The central banks are very experienced. And in the end of the day, the Fed, the Canadian central bank here, the Euro system, Bank of England, Swiss colleagues, we all should try and make huge efforts to create here also and push for international standards. I think this is the key for success also, and that's why we are also talking in different international fora on these international standards.
Well, and I guess another important point is how cryptocurrencies and how central bank digital currencies might play out on the dark side. One of our viewers writes that criminals, dictators, and speculators love cryptocurrency and wonders whether CBDC will have an impact on cryptocurrency popularity. But another viewer writes a little bit more of a pointed question, which is that there's a risk that CBDCs and sovereign cryptocurrencies might allow countries like Russia and Iran to try to evade international economic sanctions. So I guess I'd be interested in hearing from you, how does one secure sort of the dark side of the use of cryptocurrencies?
Well, that is definitely one other big issue when it comes to the creation of CBDC, because there's so many people in the US, also here in Europe, who have fought the dark side, AML, for so many years. And you have kindly mentioned that I have been a member of the European Parliament before I joined Bundesbank. And I can tell you, I was also very much pushing there as an MEP for AML directives to further enhance the systems in Europe. And so for me, it's absolutely clear that we really can't allow now others to take advantages through dark channels when we create those CBDC. So we have that point to take very serious into account how to avoid here criminal issues around, and especially you have said that states who were sanctioned by other states could take use and take benefits out of that. So this is definitely also a big part of our considerations at the moment, how to avoid that for the future. But I have to say, also those guys who have bad ideas and operating through dark channels are quite clever. And of course, we have to really team here our efforts, not only as a European central bank system, but with all the central bank's colleagues, supervisory authorities on a global level. And then you can see how keen also other central banks from different countries or different regions of the world are really keen to interact here with us. This is also a first signal how they wanted to treat this issue. But again, here we have to find also solutions on an international level. And again, here the US and Europe are key to have success in that.
Mm-hmm. I have two more viewer questions I'd like to fold in before coming to a closing question with you. And I think that these two viewer questions complement each other well. One of our viewers writes, one advantage of Bitcoin over traditional currency is that there are a finite number of Bitcoins, whereas a central bank can issue more currency whenever it needs to, which devalues the currency already in circulation. Will CBDC have a finite issuance?
Well, to be honest, I can't really answer that question, not because I have no view or opinion of that, but this is, of course, also another point we are discussing at the moment. So there's no final decision on that taken. So that's why I'm not really able at this moment to answer this question, but it's definitely a very important topic also for us within our discussions.
And I guess this second question is also one that's currently being debated. Our viewer writes, there's a debate at the moment as to whether CBDCs will increase inflation due to more money being funneled directly to consumers, or not affect inflation at all, because the total money supply is controlled by the central bank or banks. Where do you stand on that question? Do you think that CBDCs will be more inflationary or less or not affect inflation?
Well, if we would have an answer already on that question, it would many things much easier for us now when when we're thinking about the creation of such a CBDC. Of course, as you could imagine, we stand to our goal of inflation. So at the end, that should also mean that we stick to that goal also when we will issue a central bank digital currency. That's absolutely clear for me in that respect. On the other hand, we haven't have so many CBDCs globally at the moment. There are some with of course also different options around the globe, but these are only CBDCs from smaller economies. So at the moment also we haven't have the data, the statistics, how to really judge on how inflation will react on a CBDC. And that's definitely a point we also would really love to have more data on that, because as I said, it would make so many things easier for us to judge about.
Well, Burkhard Balz, if you'll bear with me, we just had two speculative questions, and I'd like to remain speculative with my closing question as we look to the future. You said in your opening remarks that it is highly likely that payment systems will expand and that widespread adoption of digital currencies might come sooner than we think. And I guess the question in some people's mind, and certainly in mine, is, do you think digital currencies will ultimately replace paper money?
No. And Steve, I would like to be very clear here. A digital euro would simply offer an additional choice for consumers, ensuring a level playing field in payments in the digital world, and it would complement, not replace the paper money. This is, by the way, the question I got most here in Germany, because most of the people really asked me on every occasion, do we need and do we have cash also in the future? And
well,
because I'd like maybe one point, Steve, very briefly, as I speak to an American friend here, and then also, and I'm here also a strong believer in that, paper money, cash is always a means of freedom. So I'm very much in favor of freedom in any respect. And so we have also spoken about privacy. And so at the end of the day, my answer is here very clear. We will also see and have cash at least during our lifetimes. And I hope that we will have still a long lifetime in front of us, ahead of us.
Well, Burkhard Balz, I'd like to thank you very much for spending the last hour with us talking about digital currencies and the path ahead. Our viewers, I'd like to share with you that Burkhard Balz's remarks will be posted on the Bundesbank's website in short order, probably by the end of the day today, if you want to read what he told us. And I'd also like to thank you all for your active participation and all of your questions. Burkhard, I hope we have a chance to see each other again in person in the not so distant future. But for now, it was wonderful to see you virtually. And thank you again for this fantastic discussion.
Thanks a lot, and all the best to you personally, Steve, and also to the American Council on Germany. See you next time in presence in New York or here in Germany.
Thank you. Thank you.
Bye-bye.